Konnichiwa! Yes, we take the samurai to the land of the setting sun and the death of the yen. Oh dear, oh dear, oh dear. We are here to tell you about the great currency that is the Japanese yen, that is great no more, that is setting like the sun. There are more men that make crappy and nappy than babies out there, far east, and we're here to tell you that their currency is about to do the same. Not only that, there are opportunities. There are opportunities to short that yen against other failing fiats even, not even high quality ones, and still make money, yes, and have a positive carry, that is. Don't forget, the yen, my friends, has the lowest interest rates still, despite or in spite of the fact that they import a massive amount of commodities, and commodities have gone up, and the yen has gone down, and the inflation numbers, well, you get lies, damn lies, and statistics, and then you get not embarrassing the Japanese. And that is where we're at in terms of their inflation numbers. We'll be taking a look at the Japanese debt markets. The yen across a multiple of crosses of stinky fiats that are equally sinful, but somehow a little younger and a little fresher than that aging samurai warrior who has the wrong kind of nappy, or at least the wrong kind of pursuit in terms of what goes on in that nappy. And we will talk about the buoyant opportunities that will be surrounding the macro, big, multinational industrial companies of Japan. That's right, they will benefit from an export hedge. They will benefit from an export hedge, much in the same way as we used to talk about a rand hedge in South Africa. When you are paid in a currency that is not your own, when your dominant share of market is not domestic but international, you will climb and climb and climb in that depreciating currency. You will climb with extra gusto. You will have a tailwind. That's right. We will give you one. There are many more in our exciting community that are in beautiful setups, including many other crosses on the currencies that are in better setups to that which we'll be showing you today. However, we're going to give you a wee clue as what's going down. So let's go to those charts and start with the currencies. So here we have the euro, JPY, I. That's it. Now, the euro, a fatally flawed currency, as many of you will probably understand, has actually had a little bit of an Indian summer against the dollar, rallied up from 0.95s up to the better part of 1.10s-ish. We warned it's going to have a wee rollover, and that has started to take place to some degree. However, as bad and as sickly as that naughty little bedwetter European boy is, there is someone uglier and older and more deviant than him. That's right, I bring in the little Japanese gentleman in the wheelchair over there with his incontinent sack alongside him. Yes, it's mean to speak of such an honorable nation that I'm actually deeply fond of in such a manner. But their currency is exactly that. And you have the European banana currency, in my terms, actually being positively technically set up on a macro level against the yen. What's this, you say? Surely not. This has been a community trade that we've had gestating in our nasty little den and our coven of witches and warlocks in the sniper circle that you too could become a member of by hitting the first link in the description below and booking a call. But we've had this trade on our radar for an extended period. It is a lengthy one. It broke at around the 134 level. So I'm showing you this green level over here that I've now made pink, of course, silly boy. And we expect, wait for it, a run from to 177 at minimum from that 134. And we expected also that you would never see the 124 level again. And since then, it has made good progress, I'm afraid to say, for our Japanese friends. This is, of course, a monthly chart, by the way, and there have been many flicks and flacks in that on the lower time frames, as you can well imagine. But we are grinding towards our second interim on this fractalized upside hunt volatility funnel setup. And there is a bonus. Yes, there is a bonus. We feel there is an outlier blow-off moment that will see 233.8 blown Not taken out, but blown. This points to a currency crisis and a blow-off disorderly event, and we sense it's coming. Why, you say? Why? How can you be? All these amazing companies, Toyota, Honda, and Suzuki. Yes, so you may say, and so I might even agree as well. Well, there's a number of reasons. Let's go to Japan's debt markets to understand a little bit about what they've been up to. Cheeky little devils. Terrible demographics. Terrible demographics. 0.91. That's right. 0.91 children per couple. That means not even a couple, most couples are not having a full child. They're having 0.91 of a child, which is a bit difficult. It means they've left a little pippy behind or something. No, I'm just kidding. Of course, it's an averaging number. It's an averaging number and it's less than 1. That means 2 die and you don't even replace a full person. And that's a problem. It's a real problem. So the demographics are terrible. Plus the big boom of the 80s. You see, long before California, Japan was, in fact, the Western economy by demographic ahead by a decade, by 11 years odd. And as a result, they had one of the largest booms in property, one of the largest booms in properties. You'll see it coming up when we look at the Nikkei. You'll see it when we have a look at that. And you will see those giddy heights that have yet to be met again. That's right, 1989, friends, and 90. Just think of that. Just think if the US Dow or NASDAQ was still to run the highs of 1990 or 89. Just think about that. Just think about what that would mean in terms of performance, how much higher it currently is in this financialization of everything world, of debt, proliferation, and executive exorbitant advantage by being the global currency of final reserve. Well, this is the debt 10-year Japanese market, and this has been the trajectory for it. We are, again, still on the monthly chart. And interest rates, as you'll see, actually were negative for a while. The zero line kicks in. I should have actually had a zero line in here. That's around about here. You start to go positive, roughly from where our funnel was. We were watching this because we were watching and calling the downfall of debt markets in the West. And of course, the Japanese, as I've already alluded to, do not have many of the commodities they need, like gas and oil and various other things. They are a manufacturer. They need to import and then export. And of course, commodities going up in price and going up in value, energies going up in price, going up in value, all of these things led to a problem. In fact, we got an upside HVF that suggested to us that they were going to let go of their 0.25-ish range that they'd settled in over here after bumping and scraping upwards as the US ever ratcheted its rates up tighter. You see, the ratcheting of the US rates is adding to pressure in the other nations of the world that do not do the same. And Japan, last time I heard, around about 280% of debt to GDP, which is huge, probably only beaten by America when you take in their welfare and Medicaid, but that exorbitant privilege, don't forget, it'll be the last one forced to recognize that possibly. But Japan does not have that exorbitant privilege, does not have the tax income. It has got more retirees and people living long lifespans, one of the healthiest for longevity. Yes, the Japanese, all that seaweed, all that iron, it's doing them great. They're doing it and they're sustaining and they're sustaining. This is not very good for the public financial purse because there are too few people to fund and build and create and do the work that the older generation that has this huge pig in the python effect that is going through. So they also have a form of boomers just 11 years older. And as we've seen, that has a terrible effect on stock markets, and we'll get to that. It also has a terrible effect on currencies if you refuse to raise rates. And this is what's happened. They've did it and they dallied, and you've seen we did in fact run our targets for the upside HVF, which was actually through the 0.5. We had a 5.26. It actually went right up to almost 0.6 and has crashed back down, and now is a little bit schizophrenic, one might suggest. And as a result, it needs to settle down. It's been very volatile recently. However, it's mainly because of policy. In short, The Japanese have said, we will continue to maintain and hold the value of this item. This is how bonds work, my friend. It's in fact a seesaw. Rates on the left side, valuation on the right side. Rates up, valuation down. Valuation up, rates down. Now, the Japanese are continuing to hold this end down on rates at 0.5. That keeps an artificial higher valuation on their debt. Why? Because everybody is loaded with a debt, including the Bank of Japan. They also own the bulk of the stocks and the bulk of everything. Dominant buyer of last resort. You're talking about the Fed on steroids here. Monetizing and buying everything. But this debt, my friends, is not valuable. The wives, culturally the wives, the husband would hand over the check and the wives would invest conservatively, you see. And in government we trust. And that meant buying a very low yielding government bond because that was safe, not too risky and conservative. Of course, but not if you're in a Ponzi scheme, my friends, and not if the government is in fact the biggest perpetuator of financial alchemy and deception. And as a result, this is one of the worst investments in the world. This is one of the worst investments in the world as you lie about your true inflation rate and the input costs that are occurring as you freight the wood and the rubber and the steel for making all your beautiful vehicles and all your sansuis and everything else of great delight that the Japanese do so well. It's probably not even Japanese sansui. I think it is, but anyway, someone in the comments correct me. So in short, the debt markets are a Ponzi scheme. They cannot be sustained. And they are trapped between a rock and a hard place. And when you keep artificially high debt markets, you have to take the loss somewhere else. And that, my friends, is in the game where everybody can look and see who's wearing no clothes. Some pull their pants a little higher to cover the naughty bits, but the Japanese, they let it hang right down there, 0.5 inches off the floor, little tiny pecker wavering in the wind. Buck naked, you see, and this everyone else in the room can see. The man has no clothes. The man has no clothes. The yen is a short. The yen is a down. And for that, we have to go back to the currency markets and say, this is how the European that keeps his pants somewhat up to just below the belt line is actually a relatively less ugly leper in this leper colony. And this is how you can actually see potential upside for the euro, no less, far from our favorite currency. Now, you see, we see a bitter wind befalling America, and one of the beneficiaries, we think, could in actual fact be European stock market. That could see money. And don't forget, the European markets have been rather underperforming next to their Anglo-Saxon Western friends on the other side of the Atlantic. In fact, all the money crowded into America, and valuations, because of socialist policies and various other things, as I've mentioned many times, on the UK, which is part of that larger European conurbation, they've only really just stepped past 7,000. When I moved there in 1999, they were at 6,900, and today they're at about 7,300. That, my friends, is 24 years ago. I've been, I've gone, I've left, and I'm still laughing at them. That's right. And their pound has gone from 2.11 pre-subprime crisis and averaging around 160, 170 to 125. So not only have they lost on the currency front, they've lost in performance on the equity, and that is one example, and the Europeans generally are the same. So could the euro actually become a relatively cheap America in de-Americanizing times for both equity and many other things? Possibly, possibly. We've shown you the BMW share performance versus, we'll show you an American car maker that we think could do a little bit of a spiller, an absolute thriller, and head far east all the way to Manila. That's right, but not quite Tokyo, because we'll cover those shares later and those automakers. So we will give you an update on that, but let's stay with the yen first, because understanding conceptually that the yen could weaken, not just against the euro, but also that we see even against the flawed dollar, that we expect further downside for the yen in the USD JPY crosses. So messy charts, always a working man's charts are messy charts. This is potentially the demographic bottom. Let's turn the lights off to take it away, all the drawers, and have a look at this with me. We could log scale it a little bit to reduce the intensity, but it's good to have a look at it in a normal sense. You see, the Japanese did to the rest of the world the out-industrialization, the out-perfecting of total quality management and so many else that saw their currency strengthen all this time. And then they funded the biggest financialization of everything boom. Now that is a dirty little Khazar trick. And that, my friends, sows the seeds of future poisons that destroy both your currency, both your financial system, and asset price values. So we called this move on USD JPY some time ago. Cheeky little HVF first in a new trend, and that's what we're going to show you. And our opinion is that against even the failing dollar, the yen is going to continue to go in the opposite direction up, having been one of the strongest currencies of the 60s through into the 70s, into the 80s. It is now going to reverse on account of everything they proliferated. When they were giddy and high on being the greatest nation of them all, they did dirty money lender little tricks. And this is where it's got them. So let's have a look at this. Let's go into a shorter time frame view and just take it all in. So that was this particular setup. That performed to target, as you can see for us. That's the target that we were looking for on an HVF method break. It was a beautiful break from 110, ran you all the way up, took you out on a localized high at around 139, but left quite a bit on the table as you traded. 150, bang! 150 literally was, there's 150, the high. It wasn't the absolute high, but it was the level mark for which you got one of the most fiercest pushbacks against the dollar. And this was a yen fight back. Lots of jibber jabbering, lots of talking, lots of central bank commitments. And the world bought it for a while, you see. They bought it for a while. However, as you've seen on the interest rates, that interest rate hasn't moved or changed. It hasn't moved to give someone a better reward for this depreciating currency. It hasn't moved to acknowledge the fact that commodities are up in price versus the doughty currency of the day. No, it hasn't moved at all. And after this correction, we are now seeing the beginning, even against what's been a recently fairly weak dollar, the beginning of stirrings below the belt line. That's right, stirrings below the belt line, which could indeed lead to further upside. So let's digest that for a little bit and talk technically about what we see is happening for the yen, even against the dollar that is in some form of de-dollarization woes. Here's your big rejection up top there. There was your 150 mark. Squeezed, and boy, did it fall. And it shocked me. As someone who always says, don't call a bottom, I started to get tempted here and here only for that to happen. That truly was a substantial pullback. Amazingly, it supported on a funnel of a falling wedge that I never thought we would see again. But that's markets for you. It did go very far in a very short time frame during the dollar strength period that we also called on the Dixie. That was against the euro when the euro was 117. That traded all the way to 0.95 on the Dixie. That was 87 and then 89, breaking our neckline at 94 and running 110. All called on this channel for you. And subsequent to that, the weakness that has since ensued, that has seen that 114 fall back through the 110 and run all the way down to the 101s, 102 levels where you find yourself today on the Dixie. So this is the story of it against the yen. And this is what we see technically. This is what we're seeing. So we have a key level of around 137.5. Let's clean that face up a little bit there. It's already a busy chart. And we have what we feel is a complex inverted head and shoulder that will see the yen make a 148 run. A second go heading towards the 150 mark that we told you that was so seminal during the bullish period of the dollar prior to the recent weakness. So this orange is a left shoulder for us. We'll draw it again for you in pink again, TG pink, the run of the 137 with real momentum. Note the tentativeness around it, then broken with momentum and the return move. That is typical of shouldering, breaking back down, channel, eventually a bottom, a rally, a failure at the 137. Down, but not as far this time. That's right, we have one smaller gluteus maximus than the other. We sit skew in the chair for our lack of symmetry. And then a channel up, which later had another pop. And again we fail at the 137.5. This is your number of great interest and intent. This is a neckline for what we consider to be a reversing W head with two small shoulders, which we suspect you are currently in the make. The next time you visit, you shall break. Ha ha, that poet's back. He's back. That's right. And then 148.5 is where we expect you to go. Many levels along the way where you can pause. Nothing goes up in a straight line. These are big time frame charts, etc., etc. This is an opinion based on a technical approach, which we have been sharing and discussing in our community that you could have had many days, weeks, eons, and moons and rising suns ago if you just click the first link in the description and booked a call. Also, you can trade some of these using SimpleFX, and you can use crypto as leverage there, USDT, or Scandinavian Capital Markets. Links below. Join us in a trade. We'll be giving you 1 or 2 ideas. The rest are festering in our special secret place for our premium members. But this is a bull call for the USD JPY on top of a bull call for the Euro JPY. What is that saying? I love the dollar and the euro? No, relative to the yen only. The yen is the biggest pig. That's right. In this pigsty, it is the biggest pig of them all, and it will be shown up for the current anomaly of a 0.5% interest being paid on a currency that is losing ground and facing a true inflation rate that, if we knew the real statistics for, would shock many a Japanese housewife. So you are in guaranteed loss on the most over-indebted nation outside of America, of the first world big nations, for which actually on a trade like this, you should in fact get a positive carry. Because in essence, you are borrowing $1 million of yen and you are depositing it in an American bank in a what's the word, a synthetic manner, and you are earning the pittance that they'll pay you there, which happens to be a lot more than the absolute pittance that you get in Japan. So it's a positive carry trade across a major. So everyone can call great possible moves on ridiculous emerging market currencies. Everyone should be long the dollar against the peso. Guess what? The Argentine peso. But the interest rate is 97%. Good luck finding a broker that'll give you a semi-decent carry cost. That is not good trading. This is actually a positive carry. Get paid for holding the position. Potential trade subject to your broker terms and conditions and ripple factor that any intermediary is likely to introduce. Anyway, we are going to move on from the USD JPY. We've told you their debt is rubbish. It's being sustained with an artificially low interest rate, which means the currency becomes the release valve for this perversion. And as a result, the currency will go down. And we have technical setups that we've shown you on the Euro JPY. We're now showing you on the USD JPY, only you've not got our current trade that we are taking with the yen as the weakest. But you're going to go look now, go and have a look, see if you can find it. Let's talk about the Nikkei and equities. Now, the interesting thing that I mentioned is when you have high quality industrial companies that are actually got their biggest market offshore, and they live in a country where the currency is being devastated or likely to become devastated, the stock market, my friends, should actually go up. It should go up. Otherwise, acquisitions will start to become possible, and you will find that in actual fact, the Japanese don't like that very much. They want to keep their culture. They want to keep their big champions, their nation-based champions. So let's go 4 months, shall we? Now that's a cheeky old chart. This, my friends, is your Nikkei. What a sight to see, he says. September 89, the high was 38,957. That's right, virtually 40,000 on the Nikkei. That was September. Let's get that month. This is a quarter. It's even more than a quarter. It's a third of a year. So during the period of 89, you had the biggest parabola on a major index as an advance. Yes, that's right. The leverage of everything. I'm going to put the log scale chart on it to make it look a little bit more sane. Upside HVS with overperformance like you've never seen in your life before. That's right, that's right. That, my friends, US is here right now. In a virtual sense, I don't think I'm far off wrong. That is, in fact, a lot further back than 11 years, I dare say. But that exorbitant currency privilege is allowed them a little bit of extra life. But let's look at this chart. And let's look at the log scale and see what we see. So, without further ado, we're now on log scale. And this is 4 months, a third of a year. I don't know why I chose 4 months. That's ridiculous, Francis. Why did you choose 4 months? We'll drop time frames and we'll go semi-sane again. So, this, again, is a major structural reversal. The currency reverses. If the currency is reversing, it's like our call on the turn of the debt markets. It is cohabited with the turn on the gold-silver ratio doing 128. Both occurred simultaneously during the period of March 2020. Debt will never be as valued again as it was hypervalued during the shutdown of a global economy for the narrative that you now know so well. And in that environment, silver was never more slammed versus gold, with both taking a dip, but silver particularly so, that you saw 128. Those two events bookmarked an end of the search for yield era and saw us turn into a capital preservation era. That is my opinion, and it remains so, and it is something we have called. Now, same for the Japanese. This bottoming of the 2008 destruction, another seminal economic event, was the low for the USD yen, in our opinion, and is the low for the Nikkei. In short, they are now in the event where their debt is going to be perpetually kept with a jaundiced eye in mind, and the currency will be the release valve for the septicemia that lives therein, their debt markets. And as a result, with the currency likely to lose ground, you should be long almost anything against the debt, particularly gold. We're expecting a small gold pullback at the moment, so don't put it on now. We will show you the gold yen chart though in the macro sense, but we expect, as I say, small gold pullback as we get a dollar moment or two. Doesn't change the macro. Please don't misconstrue this. But back to this particular chart, what are we looking at? Let's fatten this line. This is a left shoulder, a complex W head, and a short and small right shoulder, just like we like it. You had a real dip. When was that dip? You guessed it. The 2020 events through to March. It's 4 months, and it starts in January and ends in April. And that failed to stop you out of your very humble right shoulder, which we actually like. Most of the sell-off has happened. The complexity in the left shoulder is larger. You will learn about this and a whole bunch more and watch it implemented in our community. Smash the link below. Book a call. It's up to you. Do you want to build wealth in reset times? We're giving you some clues to help you even break into our community with real trades. But these are macro charts, my friends. These are not overnight, put on in the morning and cash out at night. These are long macro trends that will serve you very, very well, providing you maintain and retain your biases, for which you will need regular reminding, which is why you'll be surrounded by a community of smart HVF macro traders all around you with many years of experience while you gain yours. So let's take it into the single month and value this image that we are pasting for you. What do the Japanese do? They use charcoal. They paint beautifully with charcoal. What artists? A beautiful little nation. Do love them. but they've done some naughty boy stuff. Anyway, down to this 30K. I sound like a school teacher scolding them. Down to this 30K, which was reacted to and rejected, my friends. I am calling for new highs on the yen. Not the yen, the Nikkei, sorry, due to the tailwind, which will be sustained currency weakness and the grand hyper-stagflation, which sees people not know where to put their money, and as a result, equities, in quality macro equities, could just be the place. So that's a beautiful little cup. Look at that little rounded bottom, bursting through a key technical level. How many people on YouTube right now are telling you that the Nikkei has broken the 30,000, a key technical level, and is going to run, in his view, through to 57,000 in an environment of weakening yen and quality industrial macro companies that have most of their market in the export market and don't rely ostensibly on domestic market, maybe 15 or 20%. How many people are pointing this out to you right now and telling you that the yen trade is the trade for currency weakness? The yen trade is the currency trade for weakness. That gave you a number through 200s against the weak, jaundiced euro. That's right, and is now telling you 57,000 on the Nikkei, but in greatly reduced yen value, I'm afraid to say. And that, my friends, is financial monkeys on greased poles game that you've become so familiar and that we've been highlighting for so many years. So let's give you one industrial that you could watch and see how it does in terms of an equity. Now bear in mind, were you to purchase these equities outright, you will have to buy yen and you will lose the value that the currency loses for you in spite of the climbing stock, even if it climbs. CFDs, or things where you are not committing synthetic trades of longs on weakening currency Japanese quality industrial export companies to the globe, will be your option of trading, not including the devaluation of the yen. So do not buy yen to buy a Japanese company, because you will be negating that tailwind effect. So synthetic trades, such as contracts for difference, such as you could trade on SimpleFX as per below, all the macro Japanese, such as through SCM and other brokers and intermediaries, with all that goes along with their costs and associated. Do your own research. Okay, so let's have a wee peek at an equity for you. And we're going to show you one. Fujitsu. How I love that mountain. It is the iconic, I always think of this company and I think of the mountain. I don't know why. It's beautiful, but it's Mount Fiji, is it? Mount Fujitsu? What is it? Oh, I'm going completely autistic here. In the comments, our beautiful mountain that is the classic snow. Spell it for me. I can't even visualize it. Anyway, right here, right now, this is one item of a few that we've liked that is in our community, found by a community member actually. You will learn to do this too for yourself. And there are others, and potentially even better ones on bigger time frames. But we see for Fujitsu in the not too distant future, and this is a lower time frame but weekly, that it will start to make waves towards the 27,500 yen as a target, currently trading at 18,222. And we do not feel that it will run below the 16.9. So that, my friends, would give you a risk reward around about 9.18 at the moment. If you were to buy it a little more keenly on a dip, you could in fact manufacture, believe it or not, a double-digit RRR and be at 10.91 as I've just done now. Patience, limit orders are your friend. Remember this. So this is not an overnight sensation. It's a weekly setup of a particular equity. There are others that we like. Some we like potentially even more. You can find out more which ones those will be by having a look at our link in the description, booking a call and seeing how we plan to exploit the high quality, and let's be clear, there's a lot of very good quality industrial corporations that will still sell to the world at large, even though we may well be going into a great recession, which is actually a depression, but we're not allowed to say it, and there'll be reduced consumers. However, such is the quality and market share, and such is the destruction of the yen during this period, that these will still outperform and be a safe haven for very few places are safe havens right now outside of physically held gold. By the way, pure gold link below. Go and buy, delivered to your door, physically held. You hold it, you own it. Possession is 9/10 of the law. Investment monthly, dollar cost averaging. Use the bullion vault link, accumulate $50 as soon as you have 1,000, convert it, have your ounces delivered to you and buy. That is the name of the game, my friends. Gold and silver will still be one of your best plays during this period. However, in the pursuit of bringing you alternative options, synthetic trades without involving the yen on the long side of quality corporations such as this and others that we prefer a little more, could see macro HVFs reaching quite far outlier targets. Think of that Nikkei going through 57. That could mean stopping at the doorstep of 60. Remember, people have been promising me Merrin Summit Web. Oh dear, I spent 2 decades, not 2 decades, 15, what's it? Probably 16 years in the UK watching and reading Money Week. And every new year she promised us, this will be the year the Nikkei makes a new high. And that went on from around 1999 till about 2010, and I gave up on her. She will get her day. A quarter of a century later, I suspect. By the way, 89 high, and we're 23. That's actually 34 years. A third of a century later, she may well get her day. Now you get late, you get damn late, and you just get plain, cold, stone, bloody wrong. And that, my dear Merrin, is plain, cold, stone, bloody wrong. Because 34 years is too long a wait for that new high. But anyway, we're having expense in another analyst. She's a smart girl, got no grievances. But it was funny. Every year I watched her call it, every year I read it, and every year I shook my head. There never was a sign that it's happened. And I've said to you, the yen has reversed. The Nikkei has reversed. And it has set up reversal structures for not only a new high, but well past the 38,000 to 57,000. And there will be individual equities inside that index, which will supremely overperform. Again, make sure you are not carrying the burden of the yen devaluation in any manner in which you take those trades. To find out more about what we're looking at in the land of the sinking sun, and the adult nappy, crappy nappy nation, but also the beautiful, artistic, amazing, fabulous manufacturer nation of a highly refined culture that are in a bad demographic and became cheeky little financializations of everything with a bit of coercion one expects, with a bit of coercion from the usual suspects. They financially engineered themselves into a debt situation that is now unsustainable. And as a result, the creaking mechanisms of the macro system will force adjustments like tectonic plates building pressure. They will be forced to shift. And that, my friends, is the opportunity for you. Will you be trading? And how will you be trading? And what will you be trading? And will you understand what you're trading as you build wealth in reset times? If you are not too sure, you could do with a bit of help. And for that, you know exactly what to do. Until next time, I bid you well. I say, konnichiwa. All respect to our great brethren of the Far East. We will see you later till next time. Bye-bye.